Hello everyone, this is Suraj and today I'm going to talk about dynamic asset allocation fund or balance advantage fund. So as the name suggests, there is a word dynamic, right? So dynamic means actively managing something. So in this kind of category or in this kind of schemes, the fund will be actively managed across the asset classes. So the fund manager and his team will take active calls on where to invest and where not to invest, based on the current market scenario or the economic situation, so it be, right? So whatever the situation demands, the fund manager will take active calls whether they want to invest in equity or debt or a combination of equity and debt both, right? So based on the economic situation, the fund manager will decide where in which asset class they want to invest their money, how much they want to invest in which asset class, and accordingly they will take their decision. So now in this category there are so many funds, so many schemes that from different AMCs, right? So in this video we are going to talk about specifically about ICICI Pru Balance Advantage Fund, which has been a top performer in this category. Different schemes in this category will adopt different strategies to manage their fund. So when we talk about the ICICI Pru Balance Advantage Fund, let's talk about what are the strategies that they adopt to manage this scheme. So first of all, the first scheme is the investment in the equity market, where they manage the risk through derivative exposure, which means that whatever the investment they do in the equity market, so there is a risk associated with that, right? So to manage that risk, to manage that volatility, what they will do is they will invest in the derivative. They will transact in the derivative, that is futures and options, through which they will manage the risk. The second strategy that they follow is the in-house asset allocation model, which is based on the price is to book ratio or the PB ratio as we call it. So they will use this ratio to identify opportunities or find stocks that are currently undervalued, right? And then they will invest in those stocks. And the third strategy that they follow is the investment across market capitalization, which means they not only invest in the large cap but also other caps like mid or small cap, right? So they will diversify their portfolio across the market capitalization. And the fourth strategy that they follow is whenever the market is up, they will sell their equity portfolio. I mean, they will reduce their holdings in the equity and they will transfer that balance into the debt category. And whenever the market is down, they will shift their portfolio from the debt category to the equity side. In this way, they are able to take the opportunity of the market volatility, right? And what else strategy that they follow? The other strategies are, in the fixed income segment, or what are the, and we call it the debt category or the debt instrument that they have, that they hold. So they will hold this debt instrument to generate accrual income, right? To generate accrual income and capital appreciation in those debt instruments. And last but not the least, they will also do a daily rebalancing of their portfolio before the market closes. So these are the 6 strategies that ICICI Pru Balance Advantage Fund undertakes to dynamically manage the fund. Now let's talk about the performance of this scheme over the years. So we'll look at the quantitative aspect of this scheme. So coming to the returns, the first thing, so we can see a return of 32.76% in the last 1 year. In the 3 years, it has given a return of 9.62%. In the 5 years, it has given 11.18% return, and for the 10 years, it has given a 12.25% return. So it has given a decent returns over the year, right? And if we talk about, say, if you have invested rupees 10,000 in the year 2010, so now this amount will be 36,000. So it has grown around 3.6 times, right? Your fund has grown 3.6 times. And if you talk about the category, whatever the category performance, category average performance, the fund will be around 28,000. Your 10,000 has turned 36,000 if you had invested in ICICI Pru Balance Advantage Fund. And in the category, the average, the fund will only give you return of 28,000. So there is a gap, substantial gap. So in the category, it is giving a 2.8 times return, and in ICICI Pru Balance Advantage Fund is giving you 3.6 times return. So historically, this fund has performed very well. So now talking about the portfolio analysis, how the portfolio looks like. The portfolio currently has an allocation in the domestic equity to the tune of 40%, right? And in the fixed income category, it has a allocation of 28%, and the remaining is in the cash and the liquid segment. And talking about the equity portfolio, whatever the equity basket that they have, so the equity basket consists of large cap, which has the highest allocation, followed by mid cap. Also, if I talk about the top shareholdings, the top shareholdings are of ICICI Bank Limited, Reliance, HDFC, Infosys, and they also have futures of HDFC Bank Limited as of date, as of 31st March. And talking about the sector-wise allocation, the sector-wise allocation looks something like this. This scheme has highest allocation in the cyclical sector, followed by sensitive and the defensive sector. And in the cyclical sector, this scheme has the highest allocation in the financial service sector, and in the sensitive it has in the technological sector, and in the defensive it has in the healthcare sector, which has 4.6% allocation. Now going ahead, talking about the bond portfolio analysis. The bond portfolio analysis has an average credit rating of AAA. The AAA investment is of 46%, followed by AA and A. And going ahead, if I talk about the exit load and the expenses that this fund charge, the exit load for the withdrawal of the investment or the redemption of the unit before 1 year and in an above of 10% of the investment is 1%. So if you are taking out the fund in excess of the 10% of the initial investment, then the fund will charge you 1%. And if the investment you are taking out after 1 year, there is no exit load. The expense ratio of this scheme is 1.74%, which is the least in this category. And when I have analyzed the risk profile of this scheme, I have found that the risk measures like the standard deviation, Sharpe ratio and Shortino ratio is well in line with the category average. With such a good track record for the last 11 plus years and with an asset size of 30,000 plus CR, this scheme is a must buy for those investors who are new to the market and for those investors who are risk averse or who are investing primarily in the debt instruments or the debt schemes, right? So they can take the advantage of balanced advantage fund and generate higher return as well as limit the losses when the market falls. So I hope guys I was able to explain you everything about this ICICI approved balanced advantage fund as well as explain you in brief about the dynamic asset allocation fund. So if you have enjoyed watching this video, then do like, share and subscribe our channel. Thank you.